How much money do you need to buy a business, to do a deal? This is a question that I keep getting from new acquirers who want to buy their first deal or they want to get into business acquisitions. Actually, this question is an incorrect question because the answer to how much money do I need to buy a business is actually zero. I don't put any money into any of my deals. I never have. Well, I say £250, but that's nothing, right? So I've never put any money into acquisitions myself, but of course I've paid money on day one for completion. Now, if you have money to put into a deal, then doing a deal is always going to be easier. In fact, the more money that you have to put into a deal, the easier it's going to be. So the correct question is that how much money do you need to pay on day one for an acquisition? Now, of course, people always talk about 100% seller finance, and I'm not going to go into that there because doing a 100% seller finance deal is not the norm. It's the exception to the rule. So I'm going to talk about what actual businesses are purchased for, how much they're acquired for in any real business sense. And really, the answer to that is you can pay anything from 10% even up to 100% of the transaction on day one for a business. Now, typically, businesses are purchased for about 50% to 70% of the consideration on day one. That's the normal situation, the normal case, that when you are going out to buy a business, you're going to pay about 50% to 70% of the consideration on day one. Now, there are exceptions to that, of course. Like I said, I've done 100% seller finance deals. I've done deals where you pay a lot less than that. But typically, when I'm looking at transactions that go through both for myself and for people who are doing transactions, multiple transactions a year, is between 50 and 70%. At least when you're buying businesses which are worth buying. You have to think about it from the seller's perspective as well. The seller's got this asset in which is producing value for them. It's producing income on a yearly basis, on a monthly basis, whatever, however they take their dividends and their drawings. Why are they going to give it for a ridiculously cheap price up front? You can think about, listen to all of these other people who say, yeah, you don't have to pay anything, but that's rubbish. If you're going to buy a business which is worth acquiring, you're going to have to pay something up front. So let's put this in an example. So let's say that you have a business which is, the negotiated price of it is 1 million. Yeah, to make the numbers easy. If you're going to pay 50% on day one for that transaction, of course, you're going to end up paying 500,000 on day one. Now, where do you get that from? You get that from a combination of investors and lenders, right? Depending if you're, you want to incorporate leverage into the transaction. You can get that money from your own business, from retained earnings, so you can deploy that capital for investment. And you raise that money, and then you use that money to pay for the transaction. Now, there's other legal and accounting fees, and I don't want to get into that as well. But you need to think about, right, what is the purchase price of the business? What is the agreed price for the business? And then I work backwards from that. Because if I'm going to pay 50%, it's going to be 50% of that agreed price. In this example, 1 million, the agreed purchase price on day one is going to be 500,000. And you need to work out is that how am I going to get that 500,000? If, for example, you're paying 70%, so you need to work out, right, how am I going to get that 700,000 to pay for that transaction? Do I know investors? Do I know high net worth individuals, angel investors? Do I get private equity involved? Am I going to lenders to get that money for paying for that transaction? And that's the correct way of looking for the answer to this question. How much money do you need to complete a business acquisition? So, when you're thinking about acquisitions, you need to think about it from a business owner from both buy side and sell side, because of course, businesses don't generally have a price tag attached to it. If a business does have a price tag attached to it, it actually puts you in a really strong position as a buyer, because as long as it's sensibly priced, of course. Well, it puts you in a strong position. I'll tell you the reason why. Because if a business has a price tag attached to it, and that price tag is ridiculously overvalued, it does you a favor because you immediately are like, this is just an unworkable position to work from. Let's say, for example, someone's priced their business at 10 times multiple and it's only worth, 2 times multiple. You're no way are you going to convince that seller to come down from 10 times multiple down to 2 times multiple. It's just, there's too much of a gap. It's too much of a gap between that. It's 8 times multiple gap. But like, let's say, for example, you've got a business seller who has got a price tag attached to their business, and they have put a price tag of 3 times multiple, and you think, or you are willing to pay 2 times multiple, 2.5 times multiple, whatever it may be, then you've got something to work with, right? Because you're going to go to the seller and say, right, fantastic. I appreciate that you have this business for 3 times multiple. You're not going to use those words, but you're going to put it in, actual deal terms. And you're going to say, but I'm only willing to pay 2 times multiple, 2.5 times multiple, whatever it may be, for this business. But there's enough space there to negotiate, right? It's not too far apart. You're talking about 1 times multiple to negotiate from. So then you need to sort of say, okay, the terms are this. I'm willing to pay 30% upfront or 50% upfront because I've got, this much cash or capital that I can allocate to this deal, and the rest of it has to be paid over whatever terms you lay out in the letter of intent or the heads of terms or indication of interest. So that's how you need to think about how much money do you need for a deal. The acquisition itself is that consideration. Of course, you need money to pay for the lawyers and accountants, but the good thing about professionals is that you can normally pay them on deferred fees. So they will invoice you once a transaction has gone through. And, that's a separate conversation. But how much money do I need to pay on day one for an acquisition? And where do I get that money from? Is it through investors and lenders? And then if you're a business owner at the moment, of course, then it's always easier to raise finance. If you're an individual and you have no cash, right, and you need to raise finance, then it's going to be more difficult. It's just a simple truth. So, do you know any high net worth individuals, or do you know people who have money? I knew one. I knew one high net worth individual, and that high net worth individual didn't put any money into the deal, right? I had to raise finance from outside. So the same way, you can do deals if you are starting from scratch. It's always harder. And if you're a business owner, especially if you're a business owner that's doing at least 2 million in revenue or more. If you're a business owner that's doing 2 million in revenue or more, your life is a lot easier. When I crossed 2 million in revenue threshold in my business, then we had a lot, to be honest, when we crossed 1 million in revenue, then life was a lot easier. We crossed 1 million in revenue in a couple of transactions because I made the mistake of buying small when I was acquiring, although my first transaction was just shy of £1 million in turnover, but we weren't there. It makes a world of difference if you're doing 999,000 versus 1 million. It's just something about that mark. But coming back to if you're a business owner at the moment and you're doing 2 million, 2 million is where people start getting interested in your business as a force for, doing business, really. Anything less than 2 million, they say actually any business less than 1 million in turnover is a micro business. I personally actually, I know the difference from crossing from the million mark to the 2 million mark and beyond, that things changed a lot when we passed the 2 million mark. And, so if you're a business owner and you're already doing that and you want to do a transaction, then your life has just become easier. And of course, if you are in that position and you want to do a transaction, but you don't know how to, then you can click the link in the description and, go through to, have a call with me. And if you don't, find another M&A advisor who knows what they're talking about and get a deal done. That's enough for this video. So I'll see you in another video where I'll give you more tips and tricks on how to get an acquisition done. And of course, in the meantime, you can watch a video just popping up somewhere on the screen and you'll learn more about value acquisitions.